I would prefer if the deal comes through a reference, right? And from a good reference, which means that the first level of filter is already done. So I never invest if somebody writes me an email on LinkedIn, right? Or I just get an email saying I'm doing this. And I've done that in the early part of my career. It never works out, right? Reference solves for a lot of things. And that's why networks are important, right? You refer me a deal, I'll refer you a deal, right? And that's why being connected, telling each other to invest together. And it is in our selfish interest, like for all of us from Pantnagar, right? That if we invest together, there is a minimum level of trust that we have. There's a minimum common. You know that none of us is going to cheat, right? None of us is going to run down the startup,
Right.
right? So those see the startup journey is about reducing the points of failure, right? And there are like zillion points of failure, right? Idea, I think, is the least. Most of us who start angel investing think the idea is the most important thing. It is not. If you go on the street and ask anybody, everybody in the country is an idea. There
True.
is so there'll be a billion, 2 billion ideas. You go and talk to a 5-year-old kid, he'll tell you why you should start a toy factory, right? Or you go and talk to an 80-year-old lady and she will tell you why you should have a build a temple in the society because people give donations,
Right.
right? Idea I give like 5% value. The the inner journey of a startup, right? And you can call it 0 to 1 journey, 1 to 10, and 10 to 100. 0 to 1 is basically I have an idea, right? And I will see if I can execute it. Well, let me give you an example of Ola, right? Ola, for example, when Ola started, Bhavesh, the founder, thought we should get a cab. Okay. Now he just had an idea and he went and met VCs. How will VC evaluate a startup which is not live? Just was
Mhm.
idea. The only way they do it is they look at two things. Is the future market of this going to be big? Right? So you take a very long 20-year view. Okay. So I'll give an example. If you have to invest today for 100 years or 50 years, right? What is that one idea you will never go wrong? And that idea will be climate. Because you know that climate is deteriorating, pollution is
Right.
going. It might not happen in 5 years, but in 100 years, 100% is going to happen. So you take a long-term view on that market, right? Second thing you can do is to look at the quality of the founder, and this is the most important part for angel investing, right? And I'll give you an example. Um, I invested in a startup. I normally never invest if I haven't spent enough time with the founder. So I do a couple of calls, meet him for coffee, meet him or for coffee. There's only one exception. I invested in an IIT Bombay startup on healthcare. Okay, I was traveling, very busy, not keen in investing. But 7, 8 of my friends or fellow network people were investing. Some from IIT, the CTO of Blinkit, couple of those guys said, "Oh, these guys are brilliant. They're building a diabetes app. Looks like great." And I said, "I haven't met the founder." And they said, "No, no, we have evaluated. Don't worry." And I put in money in that startup. Right? That startup shut in less than a year,
Wow.
right? And not because of anything else. It's because we realized, half 7 to 8 months into the journey, that founder had stopped working on the idea, and he had used the money somewhere else, right? So I'm just saying, if you don't have a connect with the founder, and you can't do much about it, right? I'm saying knowing the founder is the most important part in angel investing. Most important part. So think of it as I come with an idea and I say I want to do this. Uh, Tomorrow my mood changes.
Mhm.
As an investor, what will you do? You cannot do anything. And that's why angel investing is called risk capital, right? The high risk, high return kind of a thing.
So, sir, just taking a cue from what you just said, there's a lot of governance problems that we keep on hearing, corporate governance problems in a lot of startups. All the way it goes. With all due respect to the work that they've done, but like with the likes of Byju's also and Go Mechanic, the names that come to mind. Are there any? And you just you gave an example of that IT startup. So is there few are there few tips or things that you kind of put in your checklist that okay, these are things I need to check
Yeah.
before it could be in the journey as well.
Yeah.
So anything on that you want to
Well,
share?
first is I always look at the background of the founder, right? Normally, if he has achieved anything, for example, if somebody has worked for 5 years in a company, you know that he is a patient, consistent kind of a guy. With
Right.
somebody who spent like 1 year in each company kind of thing. Look at. I always ask what has been the biggest professional success, right? And then you would get a sense of how does a guy think, right? If somebody comes and tells you that, I came first in jalebi race in school and that's my biggest achievement, yeah, you would think that the guy might be hardworking, right? But he might not be visionary or might not think big, and the idea will not become big, right? That's it. Third thing is you should also figure out why is he doing a startup.
Right.
Usually when people come and say because for wealth creation, it normally doesn't work out, because startup is a very lonely journey. It's a very sad, depressing, one day you're happy, one day you're sad kind of a thing as well. So uh, I in 60-70% of times also don't meet the founder a couple of times. If not, like Pantnagar Capital can evaluate 4 or 5 ways you can meet the founder and then curate and send it to the rest of us, for investing. Then all see they will. I don't expect that somebody's not done well in the past will do well in the future, right? There is no evidence for it, right? It could happen, but will it happen 90% of time? The answer is no. Will it happen 10% of time? The answer is yes, right? So look at some evidence of success. If I have known the guy, right? If he or she has worked with me or anywhere in the past, right? 90% times I'm going to invest if I like the person, right? Even if the idea, because if you look at data, 90% of startups pivot into a new idea within 12 months of starting.
Right.
So I want to do a biofertilizer startup, and I go 6 months into it and realize that, oh, this is not the idea I want to do. So you change,
Mm-hmm.
right? So that's what I'm saying. Not enough emphasis on ideas required, because if there is a guy who still wants to do startup for a right reason, they will still go and build it
Right.
instead of saying, the idea is gone. I can't do much about it, right? Uh, Lastly, I think solve for contractually solve for bad workflows. Good workflow company does well, everybody makes money, everybody's happy, right? Bad workflow is anything goes wrong. How do you ensure that your capital is preserved, or at least your rights are preserved? And that can only happen contractually. So, which means that the shareholder agreement, those kind of terms, right, are super critical to read, right? Having said that,
Right.
don't go so far as that entrepreneur believes that he's being choked with terms because you want to give him freedom to do his job. But contractually safeguarding, for example, the founder should not, if the founder leaves the startup, right, he has to inform X months in advance,
Right.
and he has to give away all his stocks from something like that, right? So that you can find a successor for him. Or if he's spending more money than what's required, then there has to be a board to approve that, right?
Right.
Always look for, senior hires leaving the company, not able to hire, those kind of things as well.
Okay. So great. So okay, now let's talk about this was a dhoka part, right? On the investing, what we sometimes face it, but let's talk about the exits. So majority of our angels whom we have with us are uh, have some experience, or
Yeah,
they've just started investing on this journey in this particular asset class.
yeah,
Uh, I'm sure that you must have seen various startups in which you different moments you felt, okay, this is my time to make the money and exit, but you
yeah,
waited. Plus there could be where you felt that I could have waited more for more time, but you exited earlier. So okay, are there any examples or any things do you want to share, some tips on that?
yeah. So I think all different kind of investors have different roles in the success of a startup. So angels come in very early, and
Hmm.
then you'll have series A, B, C, large guys, and private equity, and then IPOs, right? That's like the normal flow. As an angel investor, uh, it is important for us to understand that it is not that all failed startups you will not make money, or all successful startups you will make money,
True.
right? So you should realize that you have come in early. As long as the startup is able to raise the next round of money at a better valuation, you are fine, right? That is why the ability of the founder to raise capital is very important. I put 5 lakh rupees in a startup. say at say 10 crores valuation. Next year, the valuation becomes 50 crores. So it becomes 5x, which
Right.
is roughly my 5 lakhs become 20, 25 lakh rupees.
True.
I should, I, I should ask for an exit, if not full a part exit, because I have already got 3, 4x return and move out,
True.
right? That's a smart thing to do. If you say no, right, then you'll have to wait for series B, C, D. You don't know whether series B is going to happen. One,
Mm-hmm.
right? Two is why will so as more larger investors come on the capital cap table, you have lesser rights and control.
Right.
Why will they let you exit?
True.
Right? So as angel investor, I think the smart thing to do, at least what I do is at least 50 to 70% of capital, I will exit whenever it goes up, and then leave
Right.
rest 20 to 30% to play on, right? Uh, see, till like 5 years back, most of the startups, angel investing exits wherever a large investor comes in or a company was bought. Like Flipkart was bought by Walmart, angel
Mm-hmm.
investors made money, right? But recently, in the past couple of years, IPOs have become, very
More.
relevant. Most
Yeah.
companies doing to do it, right? There's an edtech company. I'm giving an example, which was about to shut. They had like 6 weeks of money left. A large another edtech company came in. So, as angel investors, everybody thought they were going to lose the money. The process of bankruptcy had started. Then somebody came and bought them. The large company came and bought them. People made money. Angel investors made money. Founders made money. That large company, is bankrupt after 2 to 3 years of doing that acquisition, right? So I'm just saying, a successful company at that point of time didn't make money. A sort of failed company made money for investors. I think it's important to be it's important to be very disciplined.
Okay.
Right? Don't get too greedy. Oh,
Yep.
I got 5x, I'll get 20x. Right?
Mm.
It's a look at probability of that happening. Right?
Right.
And
Right.
take your own judgment. Yeah, you have your own style investing. Some people say, no, I'm fine.
Right.
Yeah.
So, well, let's talk about a little bit at a macro level, right? I mean, what are you seeing as the current trends happening in the angel investing space in general? There's been we keep on hearing terms like funding winter. Is it over? And how's 2025 looking to you in terms of angel investing and generally?
Yeah. So very interesting question. I'll just tell you some macros, right? 2008 is when some decent startups were built in India. Right? Flipkart, Policy Bazaar, all of these companies started 2008. Before that, they were just Make My Trip, Just Dial,
Right.
nothing incredible, right? That's when serious investing in India started, 2008. It's been about 15 years, 15, 16 years. How many companies have are more than 10 billion? You can name
Mm-hmm.
them on your finger. Ola Electric, Flipkart, look at Zomato, now Swiggy. That's it. Paytm is less than 10, Meesho is less than 10, right? So I'm saying even after 15 years of billions of dollars going into India, the outcome is good but not great for
Mm-hmm.
investors. And that is why you would see same amount of time, same amount of money in a market like US or China, there'd be like 5x more larger companies to be built. So comparatively,
Right.
money will go to any country, right?
Mm-hmm.
Money chases where success is, right?
True.
And that's why you'll see a lot of investors exited India till
Mm-hmm.
last year. But having said that, the business models have evolved. Earlier, the model was get monthly active user, daily active users on platforms, and then we'll monetize later. Now it's not like that. Right now we are people who look at new companies like Zepto, Blinkit.
Mm-hmm.
We are paying delivery charges, we are paying handling charges, we are paying surcharge. And this is the same audience which 10 years back was not willing to pay 5 rupees for a delivery on Flipkart. So audiences have
Right.
also changed kind of a thing. I personally think there was no winter for angel investing. See, people who have savings, have bought a house, want to invest, have some risk capital, maybe 10% of total portfolio. There was always a couple of lakhs available with people, at least professionals to invest in. It is just that they didn't have enough deal flows coming in. So people weren't doing enough startups. But that has changed drastically in the last 4 or 5 months. New startups are coming in, funding has started, right? I think it's just a matter of time when you'll hear large size checks. Some people are raising, but even so, I think as angel investors, we look at what's happening in the market, and then we want to participate.